Yo, welcome to another trade recap video. Today is August 6th, 2024. I'm sorry if my voice sounds a little bit different. I lost my voice on whenever I went to vacation this summer. But yeah, let's get right into it. Alright, so I wasn't able to do a trade recap for yesterday's trade. So I'm gonna do it today. The reason being is I actually was not able to speak yesterday at all. Like my voice was completely gone, and hopefully, my voice is a little bit better starting today. So yeah. So August 5th, 2025 or 2024, Monday. Market analysis. I did take a trade on the New York PM session, and it was a losing trade. And yeah, let's just get right into it. So coming into this is the 15-minute chart here. I took this trade based off of how we reacted to a 4-hour fair value gap on the 1-hour time frame, right? So let me just pull it in the charts here actually. I believe it was somewhere here. Alright, so notice how we had this 4-hour fair value gap right here, right? Prices trades up into that 4-hour fair value gap, and overall we are bearish. We are actually extremely bearish right now in the markets. So us retracing back inside that 4-hour fair value gap and having a bearish power of 3, to me, that was me trading in confluence with the higher time frame. And I noted out how we had this 15-minute breaker, or not 15-minute breaker, sorry, 15-minute breakaway gap. So here you can see this a little bit clear here. This 15-minute fair value gap here, I was treating this fair value gap as a breakaway gap because I wanted to see prices open up on this next 15-minute candle. So open, create the high, go onto the lower time frames, we retrace back inside a lower time frame PD array, and then take out that 15-minute low. However, that 15-minute low was also aligned with the 30-minute low and 1-hour low. So we have time frame alignment. And yeah, let me show you guys what the PD array I based my trade off of. So we had a 5-minute fair value gap, right? Prices retraces back inside that 5-minute fair value gap, and like I said, I'm not gonna enter off of the 15-minute fair value gap because I don't want to see prices retrace all the way back inside that 15-minute fair value gap to continue lower. I was treating it as a breakaway gap. So whenever prices retraces back inside that 5-minute fair value gap, I took my entry, and this is what happened. We tapped back inside that 5-minute fair value gap, and then we come really close to taking out that 15-minute and 30-minute and 1-hour low. However, we didn't take it out, and we actually reversed and took out my stop loss. One of the things that I did notice this trade was I actually did notice this, but there was SMT here between ES and NQ. So whenever ES took out this swing low here, on NQ, what I should have done was move my stop loss to this swing high here to mitigate risk, because having SMT, because of ES taking out that low and NQ didn't, that was like, okay, that's a sign that like, hey, we might not take out this low right now. So yeah, I ended up getting stopped out. This was an overall this was a setup that I would have taken all the time. Like I said, it's aligned with the 1-hour, 30-minute, and 15-minute. I based this trade off of, there's a breakaway gap. We traded into a 4-hour fair value gap, and then we started getting displacement lower on like the 15-minute time frame, on the 5-minute time frame. So there's a reason why we went lower and created that power of 3. And yeah, that was a trade for Monday. So let's see if I missed anything here. So let's actually note this out. 1. And move stops. All right. So yeah, like I said, one thing I could have done better during this trade was actually move my stops to break even when I saw the SMT occur. And yeah, there's that trade for Monday's price action. So let's get into today's price action. Today was actually I would say it's pretty solid trading day. So the first trade that if you watch on my live stream, I had my mic was muted, so you guys actually couldn't hear me talk. That's a technical issue on me. I have no excuses for that, but I literally had the setup, like I had this trade setup like all planned out, but I couldn't enter this trade because my funded futures account wasn't linked to my like charts here. Like it wasn't linked to it. So whenever I did take, or whenever I was trying to get into that trade, like I said, I had to go onto a whole different like software. I had to go onto my my funded account, get the password, and then by the time I got it all set up, the trade, it already ran without me. It only gave me one opportunity, and I wasn't able to seize the moment. So let's actually go over the technicals here. So we had this bullish 1 hour power of 3. We had this bullish 30-minute power of 3, and we had this bullish 15-minute power of 3, right? Like I said, there's time frame alignment there now. So that means the hourly, the 30-minute, and the 15-minute, we all have the same objective, which is to take out the high. And on the 15-minute time frame, you can see a little bit clearer, but we closed above a 15-minute SIBI. So closing above that 15-minute SIBI means that SIBI should now be treated as a support level, and it's also one of the signs where, hey, markets are starting to reverse and we're probably going to attack higher prices. So there's that. On the 5-minute time frame, we actually created a 5-minute fair value gap, and that actually was going to be my entry pattern, was that 5-minute fair value gap. So whenever prices retraces back at the 10 o'clock open, we retrace back inside that 5-minute fair value gap. We take out that 15-minute high and that 30-minute swing high. And notice how we're buying below the 10 o'clock opening price. So ICT, I've stated this probably like 15-20 times now throughout all my videos, but ICT states that you want to be buyers below the midnight opening price, right? Well, apply that same theory throughout every single candle, because prices are fractal, he said, right? If prices are fractal, and he comes up with this concept of buying below the midnight opening price, you want to apply that concept to every single time frame. So here I'm applying it to the 1 hour time frame, and since the 4 hour opens up at 10, it's also the 4 hour opening price, and it's also a new hourly opening price, a new 30-minute opening price, and a new 15-minute opening price. So you want to be buyers below that opening price specifically. So like I said, we open up at 10. If you can see my cursor, we open up at 10, we dip into the 5-minute fair value gap, and then we take out 15-minute and 30-minute high. There's that. So I had standard projections here, standard deviation projections, and I just took the swing. I basically took the retracement leg and I took the bodies. So I took the lowest down close candle's body and the highest up close candle's body, and I basically just projected that. And partials could have been taken out -1 to, like I said, -1, -1.5 to -2. And yeah, after we take out the our partials, we would then move our stop loss to break even. And yeah, that would have been a significant move. And just look how much points we had that move, 68.25. The ranges these past few days on the markets has been extremely volatile. Like we're moving a lot. And yeah, that is that for my first trade. The second trade today, I did execute on this one. So this one was based off of how we started getting that market reversal during the New York AM session, right? So we created this 15-minute fair value gap here, and I really wanted to see how prices would treat that 15-minute fair value gap, because we still had Asia's highs intact and we still had the London highs intact. So whenever prices retraced back inside this 15-minute fair value gap, I wanted to see us, start attacking London highs and Asia's highs. But I wasn't given a entry model to attack or to get into that move. But in this trade, in this specific 15-minute candle here, I actually was given a opportunity to attack the 15-minute high, which was also aligned with the 30-minute and hourly high. So like the previous trade I took today, we had time frame alignment as well. So we have the hourly and 30-minute and 15-minute aligned with each other. So we have the same objective for all three time frames, right? And we know why we created a bullish power of 3, because we came off of a 15-minute fair value gap. We rebalanced it, and then we created a bullish closure. On the 5-minute time frame, we had a 5-minute fair value gap. And like I said, we're targeting that 15-minute, that 30-minute, and that hourly high. So here on the 1-minute time frame, we open up at 1 p.m. and it's the same concept again. We're buying below the open. So we dip back inside that 5-minute fair value gap at 1. And then prices takes out the 15-minute, 30-minute, and 1 hourly high. And the reason why I didn't have my entry set at the 5-minute fair value gap high was because of the risk. If I actually set it at the 5-minute fair value gap high, the risk to reward would have been a little bit skewed, and it would have been like a 0.89 or something like that to 1 risk to reward. And I'm not gonna risk 89 cents to make $1. That makes no sense. But yeah. And there's that. That's gonna be all for the recaps today. Let me go over what I do have in mind for tomorrow, actually, because near the end of the session today, the New York PM session, we started to get some clear movement away from this daily fair value gap, right? So notice how we had this bearish daily candle here, bearish daily candle closure. We retraced. Oh my gosh, it's actually trolling. So we retraced into a daily fair value gap, right? And notice how this daily fair value gap, or this daily candle closed. Based on its power of 3, I can anticipate for us to take out that daily high, daily low. And I have a reason why. There's a reason, and I know the why we created this bearish power of 3. It's because we came into a daily fair value gap. So tomorrow's price action, I would have liked to see previous day low get taken. So that would be my daily draw of liquidity. And I do want to see daily high be intact. So like I said, I do want to see us take out previous day low, but we should only consider taking out previous day low if we are respecting, bearish PD arrays. So this fair value gap here shouldn't even be retraced back into, actually, because it should be treated as a breakaway gap. but I feel like it's a little bit too early to say anything because Asia's session, we still have Asia's session and London session to pass. So I'd like to wait for that time window to pass and then maybe come up with a narrative. But just based off of the candle closures right now, like I said, I would anticipate for dailies for NQ to run out previous day low. And yeah, and that's gonna be all for my trade recap for today. I netted about 36 points on NQ, which isn't bad at all. Yeah, it kind of sucked that I wasn't able to get into this New York AM session trade here, but yeah, I mean, stuff happens. You just got to be able to be content with it. I didn't, like I said, like whenever I saw this happen, I noticed I didn't get my entry. I didn't chase the move, so I feel like that's something I did pretty well on, was not chasing the move actually, and like I said, waiting for my setup to occur. So yeah, that's gonna be all for the recap video today, and I'll catch you guys tomorrow. Hopefully, I mean, I'll be live streaming tomorrow again. Maybe if I do take a trade, I'll post the trade recap for sure. But yeah, until next time, peace out. Bam.